All right, so today, October 18, Netflix and Tesla had earnings after hours. So I just want to share the trade that I made on Netflix and Tesla using options. So if I go to positions, I guess I can go to positions here. So Netflix, I sold a Netflix put spread for November 17 expiry. A 310-305 put spread. So I'm selling the 310 put and I'm buying the 305 put. Collected a net credit. So if I go to orders executed, so a net credit of $1. And max loss on this one would be $4. And that would only happen if Netflix drops below 305 by November 17. Now, the reason I went to November 17 instead of this week's expiry, which would be October 20th, is because I wanted a chance to save the trade in case the stock dropped hard after earnings. So if the stock dropped to, I don't know, like 290 or something after earnings, if I had the October 20th expiry, then I would get max loss right away. But if Netflix right now with the November 17 expiry, if Netflix actually dropped to below 305, it dropped to 290, because I still have time in the trade, I could try to save it by selling a call spread and turning this put spread into an iron butterfly. So for example, if Netflix opens tomorrow, October 19, at 290, I could sell the 310, 315 call spread for the same expiry, November 17, maybe collect $1 or $2, therefore limiting my max loss. Instead of having a max loss of $4, I would have a max loss of maybe $2. So with one contract, I sold one contract, so that would be a max loss of $200. But I still have a chance. Maybe Netflix comes back up by November 17 and lands near the 310 strike. So it's a small chance, but gives me a possibility of maybe recovering something from the trade while decreasing or lowering my max loss on the trade. So that's why I went with the November 17 expiry instead of the same week expiry. And also, if Netflix did go up, because there's a volatility crush after earnings and because the stock went up, I'll be able to close the November 17 expiry as well. So October 20th would have been a much faster decay of the options, but November 17, which is 30 days away, will also decay as fast because of the volatility crush and because the stock went up. So if we look at Netflix, let's see what Netflix did. So Netflix after hours flew to 391. So it went up 44 points. Expected move was about 40 points, I believe, for November 17. So it went up 44 points. So if I had taken the October 20th trade, they would have been a much better winner. But I took the November 17th, and so this should still be a winner. And I'll confirm it tomorrow how much I was able to close the put spread for. I'm not going to hold it till November 17. I'm going to close it the next day. Now let's look at Tesla. I did the same concept. Where's Tesla? Tesla's over here. November 17, 220, 215. Collected $1 as well. So if I go to orders executed, Tesla, $1 here, 220, 215. So same concept. And now let's see what happened to Tesla. Tesla, after earnings, it dropped 10 points. It dropped 4%. But my strike is 220. So I'm not losing right now. But probably won't be able to close the trade tomorrow because the stock dropped and I still have 30 days to expiry. If I had taken same week expiry, maybe I could have closed the trade. So with Tesla, I might have to hold on to the trade for a bit. Maybe it gives me time for the stock to recover. Maybe it continues to drop lower, who knows? But it gives me time to save the trade. And if anything, I could sell a call spread against it to lower max loss, to decrease the max loss on the trade. And maybe I can get out of it for break even tomorrow. Maybe it's trading for $1 as well, because there's going to be a volatility crush because earnings has been announced. So for sure there's going to be a volatility crush. But because there's still some time left, the stock and because the stock dropped, then the stock will still hold a bit of premiums. So we'll find that out tomorrow, October 19. And yeah, so these were the two trades I did for earnings, October 18 for Netflix and Tesla. And like I said, the reason I didn't go for the same day expiry, because in case Netflix drops again another 20% or 30% after earnings, then it would be a max loss right away and I can't save it. This way, I can at least decrease the max loss, try to save it. So what I like to do for earnings is, I used to like playing naked puts, but then one bad earnings can destroy you. So at least with a put spread, one bad earnings is not going to destroy you. You would lose $4, and at least with a 30-day expiry, you can minimize that $4. So what I like to do is I like to look at the straddle value and to get the expected move. So November 17 straddle value was, so obviously the stock moved, so it was trading at 346 before market closed, so about 345. So you can see that for November 17 expiry, the straddle value was worth about, so basically I just add the put and the call, add the money. So it was trading at around 40, while the October 20 straddle was around 30. So that's the proof that there's a lot of volatility in the same week expiry. But I wanted that extra days to expiration. So 345 it was about 30. So I could have sold either the 320, 315 put spread for this week, or like I sold the 310, 305 for November 17. So an extra 10 points lower, but also more time to save the trade in case it goes bad. But if it goes well, I could close both trades anyways. So that's the advantage. If the trade goes well, which means goes up, I can close the trade. I can close either trade. If the stock is flat, I should also be able to close both trades because of volatility crash. If the stock drops, I might be able to close the near expiry, the close expiry, the October 20th expiry, but I would not be able to close the November 17 expiry because there's still time left. So yeah, so that's how I sold it. That's how I chose the strikes for this trade. Did the same for Tesla. So Tesla, if I look at if I look at November 17, closed at 242. So 240, so it was trading at around 30 points, so 240 minus 30. It should bring me to 210 actually, but because I sold the trade earlier in the day when it was trading at 250, I ended up choosing the 220 strike. So my strike isn't the best for Tesla, so it's not a good entry. I should have been at 210, 205. Actually, let's see what 210, 205 is trading at right now. So on the November 17, not Netflix, I wanted Tesla. So Tesla, and I want November 17, and I want 210, 205. So 210 bid was, so about 375. Yeah, so I would not have gotten $1 out of the 210, 205. I would have gotten $1 out of the 215, 210. As you can see, last is 476 and 375. So I would have gotten $1 out of the 215, 210 strike. So I could have gotten a better entry if I waited end of day instead of entering the trade earlier in the day. If I go to orders executed, you could see Tesla was filled at 12 noon. While Netflix was filled at 245, and Nvidia is not an earnings trade. It was just a trade because Nvidia dropped hard today. It was a big red day for Nvidia, so I sold an out of the money put credit spread on Nvidia, 385, 380. Let's see what Nvidia is doing right now, just out of curiosity. This was not an earnings trade because earnings is November 21st. I took November 17 expiry. What is it doing at 421? Okay. Yeah, probably showing a small loss. Yeah, probably small break even. Yeah, not moving much. Now I wanted to do these trades with Interactive Brokers, but Interactive Brokers kept kicking me out this morning. Would have been much cheaper with Interactive Brokers. I mean, with Questrade, I had to pay about. Here I had to pay $6.45 of commission over here, and I'll pay another one to close it tomorrow. Netflix here, another 645. With interactive brokers, probably would have cost me $2 max for each contract for each trade. So it would have been about like maybe $1 per contract. So it would have been much cheaper. Would have saved about $4.45 per trade here. Per trade, but then if I open and if I close it as well, that's another $4.45. So it would have saved $10 basically with interactive brokers. But sadly, it kept kicking me out. I wasn't able to log in. I tried maybe 4 or 5 times. I gave up. I just went to Questrade right away. So yeah, so that's the so these are the trades I did for Tesla and Netflix. We'll see tomorrow what I'll be able to close them for. All right, so now it's the next day, October 19. Let's see what happens with Netflix. So if I open Netflix, you could see it's trading for, I can close it for maybe 8 cents. So I'm not gonna hold on to it till November 17. I'm gonna have to close it. So I'll put an order here for, I don't know, let's try 8 cents. Send order. Now the annoying part is the commission that I'm gonna have to pay, but I have no choice. Buy to close, sell to close, send order. And then let's look at Tesla. What happened with Tesla? So Tesla dropped to 225. My short strike is 220. As you can see, it's now worth 175, 195. So I can close it actually for that price, take a loss of $80 or $100, but then I made a profit on Netflix, but not enough to cover. If I consider both trades together, then it's a very small loss, or then it's a very small loss or even break even. But the whole point of going to November 17 is to give time for the trade. But it looks like Tesla's going to continue to drop. But I'll hold on to it, and if it drops below 215, I'm going to sell a call spread against it and reduce max loss, and maybe I get lucky, Tesla comes back to 220, I can close it for maybe $3-4. We'll see. So I think I'll hold on to it for now, and let's go check up on Netflix. 8 cents did not close. 14 plus 4 8. Okay, let's try 9 cents. 8 cents should close. Let's try 9 cents modified, send order. Come on, 9 cents. 4 plus 13 17 divided by 2 is what, 8. Yeah, so 9 should fill. What is this? Let's try 10 cents. That's final. That's the last price I'm putting. 13.16. Yeah, what the hell? 9 cents should fill. Let's try 10 cents, I guess. Send order. So now buy, modified, 10. Okay, send order. There you go. Let's see, what did it get filled for? So it got filled for 10 cents, yeah. So yeah, so there we go. I closed, and you could see, so profit for the day 90 for that trade was 90 USD, but that obviously doesn't include commissions. Remove an extra $10 of commission. So that was Netflix earnings trade. Pretty fun. And now next we've got, so Tesla, I'm going to hold on to it. I can't close it.